Welcome back to How Not to Buy a Car. The title of this video is Sales Tax on New and Used Cars, Leases, and Trades. So if you're new here, my name's Taylor. I was a sales manager and salesperson in the car business in Calgary for about 17 years. I'm a real estate agent now, but I keep this community going to help people through the purchase and lease and trade process when they're buying a new or used vehicle from a dealership. So this video is going to be kind of long, kind of dry, kind of technical. I'm going to scribble in MS Paint. I'm going to tell some stories, and it's going to get a little complicated. If you don't make it all the way through, that's okay, but bookmark this video, and you might want to refer back to it later when this eventually comes up when you're buying a vehicle. So my videos are primarily intended for people that are buying in Alberta, where we have a 5% GST. That's the federal goods and services tax. In other provinces, you will have a higher sales tax. You'll have a PST or a HST or whatever. And Alberta's probably headed there, but that's another topic. This is based on shopping in Alberta. The same principles will apply. The percentages will be higher, the taxes will be higher, but the same principles should apply. And if you're watching this from the United States, if you live in a state that has a sales tax, this will basically work the same way. But you might want to confirm how things work in your state. This is primarily for folks who live in Alberta. So when you buy a vehicle from a dealership or lease a vehicle from a dealership, that vehicle is going to have GST added to the price, 5%. If it's a brand new vehicle or a used vehicle, and yes, you have to pay tax on a used vehicle, even though all the GST was already paid on it when it was purchased originally, the dealership still has to collect and remit GST on the sale of that vehicle. Whether it's new or used, whether it's had tax paid on it before. I know it doesn't seem fair, but it's not the dealer's fault. Don't get mad at them. I used to argue with customers that didn't think it was fair that I charged GST, but get mad at the government. They're the ones charging it. Ultimately, that is a retail store, and that is the merchandise they're selling, whether it's new or used, and they are required to charge 5% on all goods and services that they sell. So, yeah, it's a used car, and someone already paid all the tax on it, and it's going to get paid again, and that might get resold a couple times, and the government's going to make a whole bunch of money off that. But take that up with your member of parliament, not with your car salesman. Anyways, say you buy a new vehicle, and it's $40,000. I'm going to use real simple round numbers because I'm not good at math. $40,000, you're going to pay $2,000 GST on top of that. Same with if it's a used vehicle, a $20,000 used vehicle, you're going to pay $1,000 GST on top of that. If you're financing the car, that GST will be included in your payments. So you are financing the total transaction amount. So if it's a $40,000 new car, you're effectively taking out a loan to pay for the $40,000 plus the 5% GST. So you're taking out a loan for $42,000 to be paid back in installments. And you're going to pay all that GST back one way or another. Regardless of how long you keep that car, you're paying all the tax on it. Same if you buy a used car, it works the exact same way. Now, leases are a little bit different. Okay, so if you lease a car, you're not buying the car. You're paying for a service, like a rental. It's a type of rental. It's a contract. Someone else owns the car. The lease company or the lessor owns the car. You are the lessee, and you have to pay GST on what you use. So because you're not buying the car, because you don't own the car, you just pay GST on your payments. So if it's a $40,000 car, and I'm going to use really simple numbers, and say it's a 4-year lease and it has a $20,000 residual, and you're paying, your $20,000 depreciation over 4 years, never mind the interest. Anyways, say your payment's $400. You're going to pay GST on top of that payment. So you're going to pay another $20 GST on top of that payment. So you're only paying tax on what you use, because GST is goods and services tax. If you're taking out a lease, you're not buying goods, you're paying for a service. So you're paying tax on the service, not the goods. Now, it gets complicated when you go to trade it in. And I'll come back to that later. So in the purchase process at the dealership, if you have a trade, there's something we call the GST credit, or if you're in another province, PST or HST credit. And what it means is you're only paying GST on the difference. So using simple numbers again, if your trade-in is worth $20,000 and the new vehicle that you're buying is worth $40,000, you're going to pay a difference of $20,000. So that means GST will only be added to the difference. So rather than paying the $2,000 GST on the whole 40 grand, you're paying $1,000 GST on the $20,000 difference. Now, sometimes dealers will spin that. Actually, most times dealers will spin that, and they'll say, I'll give you $21,000 for your trade. What they're doing is they're taking the GST savings that you have by trading in a car, and they're effectively adding that to your trade's value to show you that you're getting more, or to make it look like you're getting more. It's somewhat deceptive, but it's also somewhat true. You are effectively getting $21,000 for the trade, but that's that extra $1,000 isn't something you're getting. It's something that you're not paying the government, because when you trade that car in, the dealer is effectively buying it from you, and they're going to charge GST on it when they sell it. So it passes through, right? They're going to resell that car and collect GST when they sell it. Now, when the numbers are presented to you, they will often, work that into the total appraisal. They'll say, great news, I got you 21 grand for your trade with GST. And that's, they're presenting that savings of GST as though it's extra money that they're giving you. So just be aware of how that works. You pay tax on the difference. Okay, your car's worth $20,000, the new car's $40,000. You owe the dealership $20,000 plus GST. Now, if you had a balance on your car, it gets a little more complicated. That means if you still owed money on your trade, say you owed $10,000 on your trade, you still get the full GST credit on it. So GST will be added to the difference. So your trade's worth $20,000. Are you still with me? Your new car is worth $40,000, but you still owe $10,000 on your trade. So you're going to pay $20,000 difference plus GST, so $21,000, and then at the end, the balance of your prior loan will be added, that $10,000. So now you're going to pay $20,000 plus $1,000 GST plus $10,000, right? Now, it gets a lot more complicated if your trade-in is a lease. And now, can you trade in a lease when you don't really own it? Sort of. It depends what it's worth. When you trade a lease and say you go to another lease, you're renewing a lease. But what a lot of people don't realize is you might have equity in your lease. You might also have negative equity, but you might have equity in your lease. So if your lease payout is $20,000 and your trade appraisal is $25,000, your car is worth $5,000 more than you owe on it. So what's going to happen is the dealership, the car is not yours to trade, but that equity is yours, because you still have the option to buy that car out. That car's got a $20,000 buyout and it's worth $25,000 wholesale. You still have the option to buy that car out and make the $5,000 back on it. So the way it's going to work from the dealership perspective, the car's worth $25,000, you owe $20,000. They're not buying the car from you, they're buying the car from the lease company, but they have valued it at $25,000. They've told you your trade's worth $25,000 and you owe $20,000. So effectively what they're going to do, they're going to buy the car from the lease company, say it's GMAC or it's Toyota Credit or whoever it is. They're going to buy the car out for $20,000. By the way, they don't pay GST when they buy it out. If you bought it out, you would pay GST. keep that in mind. I'll come back to that later. They're going to buy that car out for $20,000, and they're going to give you a $5,000 down payment towards your new one. And when they put that trade-in on their books, when they account for it, they're going to have a debit in there for $20,000 for the payout, for the check that they wrote to the finance company. And they're going to have a $5,000 debit on there for the equity that they gave back to you. So that car's going to be on their books for 25 grand, which is what they want, which is what they appraised it at. It's on their books for what they appraised it at. The fact that you had equity in it, good for you. That's rare, by the way. That's only if you buy a car that has exceptional resale value and an exceptionally low residual value on the lease. Effectively, the car is holding its value better than predicted. And I've leased 7 or 8 Toyotas. All of them were in that scenario. They all had a very conservative lease end value or residual value on the lease, and they all had good resale value because I took good care of them and they're Toyotas and they held their value. That's not true of all cars, but I digress. So, do you get a GST credit? No, you don't. So, you didn't own that car. You didn't pay GST on that car. If it was leased, you pay GST only on your payments. So you don't get a GST credit when you trade it in. You get a down payment for your equity. And you pay GST on a down payment. The down payment is just reducing the size of the loan or the size of the difference that you're paying in the transaction. But it doesn't save you any GST. Now, if you're still with me, I'm going to share a little dirty little trick that dealers still sometimes do. It used to be more common because it was really easy to get away with. You probably see less of this now, but I guarantee you it's still going on at some stores. Now, this is a little trickier. So, say you have a leased trade. When you go to trade it in, you're going to contact the lease company for a payout. And the lease company is going to give you the total payout, including it's the residual value, any remaining payments still not paid, usually a buyout fee of a couple $100, which you agreed to when you signed the lease. That was Toyota, it's $300, and then GST on top of all that. So they'll give you a total buyout, including GST. So if your buyout was 20 grand. Since you didn't pay GST on the car when you bought it, you paid GST on the payments. You paid a services tax, not a goods tax, right? You didn't pay GST on that residual amount of the car, only on the payment portion, the depreciation portion. So when you're buying out the car, you're going to pay GST on it, on what's left. So say they give you a quote of $21,000. That's your buyout. Now, buyout doesn't mean the same thing as residual value or lease end value. Buyout is how much of a check do I have to write to own this car to exercise my buyout option when the lease matures. That's what buyout means. And it doesn't even have to be a mature lease. It can be at any point in the lease. You can ask the lease company for a buyout. And you're asking them, how much of a check do I have to write you right now to own this car? And they're going to calculate that. They're going to take your residual value plus whatever payments you have left plus GST on the residual value and a fee and GST on the fee. So say it's $21,000. That $21,000 would include 5% GST. Say if this is a mature lease with a $20,000 lease end value or residual value, same thing. Lease end value, residual value, same thing. Say this were a car with a $20,000 residual value. The lease is matured. You've made your last payment. You've got a few days left before you've got to either, give it back or exercise your buyout option or trade it or sell it. They give you a quote of $21,000. And that's going to be your we're leaving out the fees on this one. That's going to be $20,000 residual value plus $1,000 or 5% GST. Now, when you go to trade it in, there's a trick that dealers will do. Are you still with me? This is getting complicated. There's a trick that dealers might do called stealing the GST. And they're not supposed to do this, but most people will never know, and they'll just overpay by $1,000. Anyways, say you're taking that leased vehicle and you're trading it in on a financed vehicle. They're going to take that buyout. Do you remember earlier when I said when you trade something in, the buyout is added at the end? they're going to add that buyout to your total. So they're going to appraise your car, say it's worth $25,000, right? And say you're buying that $40,000 vehicle. Your trade's worth $25,000. Your residual value is $20,000, and your buyout, which includes GST, is $21,000. So what they do is the car you want's 40 grand. Your lease is valued at 20,000 to buy it out. The car is worth 25. So remember, we're trading in a lease, so we don't get a GST credit, but we do get a down payment. So the car should be worth $5,000 more than the buyout. But they take the total buyout. They take the total buyout with the tax, that $21,000 you were quoted, and they add that on to the end. So basically they're saying you have $4,000 equity, not $5,000 equity. They're stealing that $1,000. They're skimming that. So the way that works is, if you were to buy out the car, you would have to pay 21 grand, right? You would have to pay tax on it. You're buying this rental vehicle from the rental company. You're buying this lease vehicle from the lease company for $20,000 plus GST. If you were buying it, you would have to pay GST as a consumer. The dealer, as a retailer, they don't have to pay GST on it. It passes through them. They have to collect GST when they sell it. So the check that the dealer is going to write to the lease company is $20,000, whereas the check that you would have to write would be $21,000. But you've been given this buyout of 21 grand. The dealer assumes you don't know any better and you haven't watched this video, and they think you owe $21,000 on the car. You do if you were to buy it out. But when you trade it, you're not buying it out. Effectively, the dealer is buying it out and reconciling the difference between what they're paying and what it's worth to give you a down payment or negative equity. So they're taking $1,000 of that equity that you had, and they're just adding it to their profit. Does that make any sense? Ask me in the comments, and I can try to explain it to you better, or give me a scenario. Anyways, if you found this video helpful, share it, like it, and subscribe to my YouTube channel. Have a great weekend.